hours or bright spells. Again, another very windy day, but the cooler air filtering further south as we go through the course of the day. Charlie and Lou.
Oh, Carol, thank you very much. Looks like it's going to be a wet weekend again. Thanks, Carol.
Thanks, Carol. So, Steph, normally if we talk about a company that had an 80% drop in profits, you'd be thinking that can't survive. But with the oil industry, it's a bit different, isn't it?
Yeah, it's very different. They're still a company which is making billions of dollars of profit, but it's a tough time because of what's going on with the oil price. Morning, everyone. Yes, further confirmation this morning that the falling price of oil is hurting the energy industry. Today, Shell is saying its annual profits are down, as Charlie says, over 80% compared to the year before. But it is still a firm making billions of pounds of profit, but just not as much as it was. Now, earlier this week, BP announced its worst annual loss in history and also said that 7,000 jobs are to go at the company. Well, joining me now is Cornelia, Meyer, who's an economist and energy expert. Good morning to you. What are your thoughts on these results? Because it's interesting when you compare the two companies, isn't it?
Well, I think relatively compared within the peer group, Shell has not done badly. They have kept the costs down. They can still go through with the BG merger. With them. They want to acquire, essentially. It's a merger, but it's more an acquisition, BG. And they will let 10,000 people go in that. So they have controlled the costs. Yes, it's a bad result, but it's in line with falling oil prices, and there was no surprise. It was pretty much in line with guidance.
Whereas BP is having a tougher time.
BP is having a tougher time. BP is doing whatever they can, and they're doing all the right things in terms of controlling costs. But it's very hard to do that on the back end of having to pay $55 billion for the oil spill in the Gulf of Mexico.
So there's still lots of costs to pay out for that, which is...
They had to pay out. I think it's done now, and they've done a great job in managing that. But obviously, if you are a household and you have a big outlay, that doesn't put you on better financial footing, does it?
It's amazing how much the oil price has fallen over the last year. Do you think the firms like BP and Shell are genuinely worried about it, or is this just part of a cycle, do you think?
It's an ultra-long cycle business. It's part of a cycle, and everybody's right now pumping whatever they can. But when you look at how much capital expenditure was cut, and Shell has cut capital expenditure, BP has, everybody has cut capital expenditure. You know, a dollar invested today is a barrel produced in 3 to 10 years. So this lack of investment in the industry means that in 3 to 10 years we will be producing less. So the prices will go up again. And then we will all be worried again about high oil prices.
Yeah, and then there will be jobs being created again as the more investment comes from it.
Yes, but the sad thing is that a lot of the really good experts are now leaving the industry, and it's then hard to get them back in. You know, you don't train a reservoir engineer in 10 months. That's an art. It's an art and a science. So experience is important.
So there's potentially a skills gap we could face in the future.
We will. So we absolutely will. And you look at the oil field service companies, Schlumberger, the biggest one, sacked in excess of 20,000 people, you know, over the last year and this year. So there is a lot of skills leaving that industry, which is sad.
Cornelia,